Hi, welcome to Let's Talk Bonds, the fortnightly podcast from INR Bonds. I am Arjun Patsarthi. In this podcast, I'm going to talk to you about how investors, retail investors, individual investors can actually make capital gains in corporate bonds and in bonds and just pay 10% long term capital gains tax. And so this is something investors may or may not be aware of, but it's very much possible for individual investors to actually uh, make trading profits in corporate bonds. Obviously, there is risk which you must understand, but how to negate that risk is also something which I will talk about. So, if you are a financial advisor, obviously the best place for you to talk to your clients about enhancing returns in their fixed income portfolios through strategies adopted in the bond market. The INR Bonds Partner Portal will help you do exactly the same with giving you all the information that you require along with the best transaction process where investors can buy and your clients can buy and sell bonds easily on the platform through the stock exchanges. Uh, so let's get back to the topic. And just before I start, um, log into, if you're a financial advisor, just log into INR Bonds and sign up as partner and see your fixed income assets grow. Before we start, um, I would like to tell you that if you're not aware, that listed corporate bonds carry uh, 10% long-term capital gains if bought and sold after a holding it period of 1 year. Now, the main aspect is it should be listed and it should be traded on the stock exchange. Now, uh, just how do you make capital gains on a bond? Very simple. You buy a bond for 100 rupees at say 8% yield, and after 1 year, the bond yield goes down to 7.5%. And when the bond yield goes down and the prices go up, so if it's a 3-year bond, for example, you have the if it's a if the at 8% you had bought and you sold it at and the yield goes down to 7.5%, the price will rise by at least over 0.75%. Now, so if you sell it after 1 year, you would make 8.75% capital gains uh, on the bond. And of that um, difference in price, supposing you sell it at 100.75, then you pay only 10% in capital gains. Whatever the interest that comes to you from the 8% coupon that is paid out is taxed at slab rates. So clearly, you can make two kinds of returns on the bond. One is through the interest income that you earn, which you pay full tax anyways, but also on the trading profits that you earn, where you pay only 10% tax. However, you have to understand that um, for bond prices can go up and down. So it have to be extremely clear on what bond you want to buy, what maturity bond you want to buy, when you want to buy the bond, and when you want to sell the bond. And if the prices go down, what do you do? Can you hold it and just earn interest on the bond? So one clean trading strategy is to buy a high quality PSU bond where you don't have any kind of a credit risk, or even a government bond where you have no credit risk. That means you don't have to worry about the issuer failing to pay your coupon rates or the principal back. And you buy the bond, and you think your financial advisor, if you're have a, or the financial advisor um, does this research and finds that interest rates can go down, that means you can buy now And if you sell after 1 year, you can sell at lower yields or higher prices and make capital gains. So you can buy a government bond or a PSU bond or a very, very strong AAA corporate bond, and then look to sell it down after 1 year at a lower yield or a higher price. And if you one risk is that what is the if it's longer maturity, that means should you buy a 2-year bond or a 3-year bond or a 5-year bond or a 10-year bond? That again depends. Now, if you buy a 10-year bond, so obviously if your strategy fails and interest rates do go up and the price comes down, then you lose money. So, and because it's a 10-year bond, you might not want to hold it for 10 years. However, if you buy a 2 or 3-year bond, in case your strategy fails and the interest rates go up or the prices come down, then you can just hold the bond to maturity. Since it's a low risk bond, you still get the coupons and the interest rates that you locked into, and just pay the full. You can get the full returns that is only on the coupon of the bond. So, just to give you an example, if you buy an 8% bond for 3 years and you hold it for 3 years, you get 8% if it's a high quality bond. Now, there are other ways to trade as well. In terms of in the government bond market, you have many participants doing buying and selling regularly, which is also possible. But then for individual investors, it's better that the ease of buying and selling is not very apparent even in the GSEC platforms. And corporate bonds, it's always better to look at a longer term strategy, at least 1 year plus kind of a strategy. And most important, if you do it after 1 year, you only after 1 year, if you hold, you can get that 10% capital gains tax advantage, because otherwise it becomes a regular tax on your income, right? So these are just some of the one trading strategy. There are many more trading strategies that are available. Come to INR bonds. You can understand and learn about all these trading strategies, and then execute them by buying bonds and selling bonds through our platform. Thank you very much for listening in. And to check the best bonds for trading, just download our app, Quick Invest by INR Bonds. We give you a curated list of bonds, and you can check which bond you want to buy, which can give you capital gains, and make the easiest of in-app investment processes and easiest of trading investment. And we enable you. All you need to do, if you want to sell bonds, all you need to do is put your sell offer on INR bonds, and we will try to sell the bonds to you at the best price available in the market with the most transparency.